Gold, unsurprisingly, led the charge among hard assets. Prices ripped through the 3360 level near the previous high, pushing into uncharted territory just shy of 3400. Timeout above 3400.
Welcome to the Morning Markets and Metals with Vince Lancy, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. I'm Vince Lancy, and this is the Gold Fix Market Rundown. There's our homepage. Over the weekend, the holiday weekend, we put out several stories that may be of interest. COMEX Death Watch, China sets the gold price. That's a comment and analysis on the rising importance of China pricing and the diminishing footprint of COMEX in the gold market. Beyond the price, there's evidence that suggests that COMEX is, in fact, dying. And along with it, dollar dominance in the global marketplace. The dollar just lost its moat. Goldman predicts a 20% decline from here. That article, that analysis by Goldman is pretty good, actually. And then CFTC analysis, we did a very brief one over the holiday weekend, showing that the China Hunt brother, who took on JP Morgan in March of last year, is back. He's leaving a footprint on the COMEX now. So he's gone international, not just buying in China. We think this is very significant and one of the drivers of the market price right now. Today, we have two things to touch on other than the fact that gold has exploded higher again, this time taking silver along with it. Gold's widening gyre, I think appropriate after the holiday weekend. And we have a newsletter, not a newsletter, an investor letter from Howard Marks to investors in his Oak Tree Fund. And we're going to share that with you, but we'll have a little bit of a clip from it here. Howard Marks asks why. Let's start with the markets themselves. We read some charts. Top right-hand side is gold with poly markets up there, which on the daily right now only tell you that if we drop, we could drop a lot. On the hourly, they're very helpful right now. Silver on the left-hand side, we have another V forming. I'm not so sure we'll get to the top of that, but if we do, that would put another $4 to the top of silver in a heartbeat. Lower left-hand side, that's gold versus the Swiss franc. That's an alarm bell for us to be on the lookout for topping behavior. Gold has yet to make a high against the Swiss franc, although it has made a high against every other currency on earth as far as we know. When it does that, you may see some sideways movement or profit taking. But until that happens, know that Switzerland has to lower rates, and they're going to. And when they do, you will get another spike in gold. And the dollar, well, that's the widening gyre lower. 10-year yields are 440, up 6 basis points. The dollar is 98.15 at a whopping 1.25. The S&P 500 is 52.19, down 78. The VIX is 32.13, up 2.5. Gold is $3,402, up 75. The $100 day is going to become normal until this gets fixed, and we don't see how it can be fixed. Silver, 32.92, dragged, kicking and screaming higher despite the selling by people that are buying gold and hedging it with silver exposure. We think China is behind all of this, meaning if you want to keep selling silver cheap, we'll keep buying it from you. Copper, 476, up 8 cents. Again, look at that. It makes no sense to you. You say, why is copper up more than silver? And I'm telling you, the world sells silver and buys copper. And behaviors get extreme in extreme times. And that creates more opportunity. And that's why silver rallies $50 in one day, one of these days. Anyway, not $50, but you get my point. WTI 63 and change, down a buck and a quarter. Dollar lower, WTI lower makes it hard for Trump to walk away from this. Nat gas 323 down 2 cents. Bitcoin 87 participating finally. 87 spot 200 up 2000. No, people are making comparisons to Bitcoin to oil as a store of value. While we wouldn't say that's wrong, we would say it's wrong right now. Bitcoin is taking its cues off of gold. As the problem persists, as it goes unresolved, other stores of value, whether you think they are or not, enough people think it's a store of value, will start participating. Gold leads Bitcoin right now. So next, palladium down 9. Who knows why? Platinum up 2, 969. Gold, silver 103 and climbing. Soybeans, corn, and wheat up, up, up. 1038 up 5.5, 483 up 3.5, 564 up 4. And there are the four charts we talked about before. Back to our regularly scheduled program. There's a poem, and those of you who are familiar with it know that it's about the second coming. But we're just going to read a little bit of it because the beginning of it describes, well, what we think we're in now. Turning and turning in the winding gyre, the falcon cannot hear the falconer. Things fall apart, the center cannot hold. Mere anarchy is loosed upon the world. The blood-dimmed tide is loosed, and everywhere the ceremony of innocence is drowned. The best lack all conviction, while the worst are full of passionate intensity. Problems at home. The dollar's downward spiral accelerated over the Easter weekend, culminating in a sharp collapse during early Asian trading. With many regional markets closed and liquidity thin, the dollar index dropped to a fresh 3-year low. The proximate cause, the identifiable proximate cause, a surge in speculation that Federal Reserve Chairman Jerome Powell may be removed from his post. Legally not possible, but influence is influence. The trigger was a Friday remark by National Economic Council Director Kevin Hassett, who confirmed that President Trump is, quote, still exploring, end quote, the option of firing Powell. Gold, unsurprisingly, led the charge among hard assets. Prices ripped through the 3360 level near the previous high, pushing into uncharted territory just shy of 3,400. Timeout above 3,400. We wrote this a half an hour ago. But what about Powell? Powell may resist easing financial conditions, and he can do that. But if he won't cut rates, Trump appears ready to apply pressure through other channels. Dollar devaluation becomes the workaround. You can do that without Fed help. There are other ways to do it. The thing is, solutions cause chain reactions. The larger implication lies in what other central banks will do next. As the dollar weakens, the euro and yen and Swiss franc are strengthening uncontrollably, damaging exports and crushing already fragile economies. If the ECB and BOJ and SMB are forced to respond by slashing rates or restarting asset purchases, we could witness the next leg in the global race to the bottom for fiat currency. Once those central banks respond, the path is clear. Coordinated or uncoordinated, we enter the next phase of monetary debasement. As the dollar loses its global reserve currency status, or the fear of that happening, engulfs the world, people put their money in other currencies. People who have not put their money in gold yet, who still have faith in the system, will say, I'll bring my money and put it into my own domestic currency or into a safe haven like the Swiss franc. And what that does is it makes their currencies strengthen uncontrollably. And that exacerbates the stagflationary impulses that will come. Recession for them, inflation for us, or stagflation for us. But that's the bottom line here. Our currency goes to zero. Their currency goes to infinity. They have deflation. We have inflation. And that must be fought. And it will be fought by lowering rates. And if we don't lower them, it flips back to us. So gold is reacting right now. Why is gold doing this right now? Well, aside from the fact that China is buying it and making a point of buying it, gold is reacting not just to the trade war now, but to the trade war solution. Without people communicating, the trade war solution is a global race to the bottom, or a widening spiral downward for fiat and a widening spiral upward for hard assets like gold and silver and Bitcoin soon. Bottom line for Goldfix, markets will stop panicking when policymakers start panicking, and policymakers are not panicking yet. That will happen if Trump's approval ratings drop like the stock market is currently doing. The gyre must widen for both gold and the US dollar, but in opposite directions. Next, Howard Marks asks why. World famous longtime investor Howard Marks has a letter to Oaktree's clients. We have that for premium subscribers at the bottom. It's entitled Nobody Knows Yet Again. And within the history lesson and the context and his opinion on if it will or will not succeed, he asks a question that many are asking. Well, most of us aren't asking, but people in the neo-Keynesian world are starting to ask. Why are we in this position now? To date, the world's high opinion of the U.S. economy, rule of law, and fiscal solidity has allowed us to take and hold a golden credit card where there's no credit limit and no bill ever comes. This enabled the U.S. to run fiscal deficits in each of the last 25 years and all but 4 of the last 45, including trillion-dollar plus deficits in each of the last 5 years. In other words, we've been able to live beyond our means, with the federal government spending more than it takes in via taxes and fees. This has led to one of the worst things about the U.S., the 36 trillion national debt and the grossly irresponsible behavior in Washington that has caused it. Since I don't expect Washington to suddenly begin to behave responsibly and live with balanced budgets, I'm left to wonder how much longer we can count on that golden credit card. Well, gold is telling you that you cannot count on it anymore. We have that full Howard Marks Fund letter at the bottom in premium. These are the stories that we have featured today. COMEX Death Watch, the dollar just lost its moat, 2.2 trillion in unhedged risk. That's an institutional take for founders on the US dollar report, and completely different perspective, but very good. HeartNet coming in 4th place. HeartNet, gold to hedge the new world order risks. Most of that report is not about gold, but he makes a point of saying that, and we thought it was very interesting. CFTC analysis, China in charge, and Trump's trade negotiations could yield a surprise. Audio commentary. And we still stand by that, but it hasn't happened yet. Surprise would come out of probably Japan first, if anywhere. All right, moving on. Markets recap. Friday, the S&P ended higher as investors weighed progress in U.S. trade negotiations with Japan and the EU. Treasury yields ticked higher amid market calm. Gold prices slipped on profit booking, unslipped today, while the dollar was little changed, very changed today. Oil climbed on trade deal optimism and fresh Iran sanctions. Yeah, so when you look at that in context, Friday was an undoing or a closing of trades that were open during the week that made money. In Canada, energy stocks led Canada's main stock index higher as investors took stock of U.S.-Japan trade negotiations. Although sentiment remained fragile amid tariff uncertainties, Toronto Stock Exchange, sorry about my nasal sound today, S&P TSX Composite Index ended 0.36 higher at 24,192. Pope Francis died yesterday, or actually today, Easter Monday. And Klaus Schwab is stepping down as chair of the WEF. We thought that was worth mentioning. Very important, actually. And in some senses, a little bit appropriate or paradoxically creepy. Data on deck today at 10 a.m. Leading index change month over month for March. Poll is minus 0.6%. The prior was minus 0.3%. You can see the rest of the week. And in premium, in addition to the Howard Marks conversation newsletter, we have the newspaper Days Events. Let's take a look at the markets one more time. All right. All eyes on gold, right? All right. So here we are, hovering at 3,400. Let's go for the dollar. I'll let Polly do her thing. Okay, so while we're actually, let's make a bragging point here. You may or may not remember that we said depth equals distance. And you notice that the dotted line isn't there anymore, the white one. Well, our target was reached. And from here, does that mean it's over? No, that's a target. That's a measured move target. From here, it could go to 4,000 tomorrow. I don't know, right? But we stand by our next target, which is 3,600. And 3,600 is based on ETF flows. But it should not be there. So I'll be consistently measuring that, because as long as the ETF buyers remain disengaged and buying dips in stocks, it just keeps adding 600 to the price. So as of right now, let's call it 500 now. As of now, it's 3,900. Remember, July 3rd, July 1st, Basel III, July 6th through the 8th, BRICS Summit, which will be a doozy. I think they'll have a lot to talk about, a lot of negative statements to make about the U.S. policies right now. And, well, there you have it. There's the whole marketplace. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lancy. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.